Alright guys, so let's get started and welcome to the live trading room of the Swing Trade FX Signals. This is basically our first live session as of yet. We just had some test sessions previously, just a few of them, but from this one we will have them Monday to Friday, same time. It's 9:30 EST. We will maybe try to adjust the timing so people from all over the world will be able to attend them, such as United States, Canada, Australia, Europe, so everyone basically can get into the live session. For some reason, if you cannot do that, all the recordings will be available on the website. We will record each and every session and we'll put them on the website, so there shouldn't be any problem, and you basically can review all our live trading room recordings. So today is 3rd of September and we're just starting some movements here in the market. The volume is increasing, the volatility is increasing since the institutions beginning to trade. Funds are getting into the market, and that's a good news for us. Our strategies are mostly performing well when we have some sort of strong trend. If we have a flat trend, our performance can be flat, but at the same time we're not going into the loss when the market is flat. That's a good news. Sometimes we're getting profit from that, but we actually waiting for the trends to come to catch the profit. So far we're running two accounts. One is live, one is a demo. Demo is just the one that I can show you. I cannot share with you live accounts. There's a lot of private information that I don't want to be shared, so for that reason I'm running live accounts for the demo accounts for the session, so I have no problems with the privacy. You know, I can show you everything and how was it. So let's look at our demo account. This basically is the account that has been running for quite some time. You can see we had the first trade in February, so that's the history from the February, and that's basically the performance here. Account history I can show you now. That's all our trades here. You can watch all this history basically on the MyFX book link provided on the website. This will be exactly the same history as here. We do not play with it and we cannot actually adjust anything. The history is there, and this is the account that's being copied to the MyFX book. So let's go through the market now, and don't forget, if you have any questions you can basically post them in the chat box, and once you're there we will basically answer them at the end of the session or in the middle of the session as we go. So as the market starting moving, this will provide some very good opportunities, and I will be doing now analysis for each currency pair. We are trading 6 currency pairs currently. This is Australian dollar, New Zealand dollar, Euro dollar, pound US dollar, pound Canadian dollar, and US dollar Canadian dollar. This is 6 currency pairs that we will be trading. There won't be any extra currency pairs. There won't be any 2 trades of the same currency pair. There will be a maximum of 1 trade for 1 currency pair. Okay. We might be trading gold in the future, but this is something we're still developing and not confirmed. But we can do, of course, analysis on the gold. We can do analysis on any currency pair you would like us to do. So feel free to request, you know, if you do some manual trading, interested in the second opinion, we will certainly do that for you. Okay, so let's have a look at now at the Australian dollar and what's happening. You understand that there are problems in China now, and even Chinese government confirming that the economy is slowing down. And if they're saying such things, meaning that the things are really getting nasty in China, that's why Australian dollar is going down, because the exports struggling, and the main consumer of the Australian goods are China. So that's why basically Australian dollar is suffering. It's not that the dollar is getting strong, but the Australian dollar itself is getting weak. Same applies to the New Zealand dollar still, since they're very correlated currency pairs, and they do depend on one another, and they do depend on the China consumption. So what we expect from the Australian dollar? Let's do some technical analysis. But before we do that, I think that long term we should expect the growth, not because the Australian dollar is very strong, but because the United States dollar will be suffering a lot in the coming years. Okay, I'm gonna start with the simple trend lines here, just to give some to see some idea, okay, simple trend line, guys, and we had this clear bounce for the Australian dollar. So now we are bouncing, as you can see. How far we can bounce? Well, I don't think it's going to be too far. We shouldn't go too far down. In fact, I think we will be stopping very, very soon, if we haven't reached the bottom right now. So this is quite a low point, I think, and we shouldn't get much lower than that. The psychological will be 1.2. That is expected low here that we could see, but I don't think we're gonna go lower. However, if we do manage to go lower, I think the trend might reverse to the downside. So this correction will become a downtrend. Let's see simple Fibonacci levels. So we're slightly off the 38.2 Fibonacci here. We're still missing about 20 pips here, 15-20 pips on the downside. This will act as a support. Definitely this area, plus minus 20 pips, will be a support. There should be some ranging, if not a heavy bounce. But just let's do some lower time frame analysis as well. What I like to use is channels. Basically, they do provide a lot of information, and they're pretty easy to use. Okay, so I'm gonna try a few channels here and there, and we will see what we will get from that. Okay, we'll try the highest channel there. Okay, this is basically the channel. Now we had a breakout. You can see this level has been acting as a support, and finally the Australian dollar did break it, which was 104. So as well as psychological round number, it was at the same time a support of the channel, uptrend channel. Now I'm gonna use the Fibonacci level to see how far we can get from the current levels now. Okay, look, zoom it out to 1 hour, make it more clear for everyone. So this was the highest point. You can see I draw the Fibonacci from the very high point, then I draw it down so that we have 50% Fibonacci right at the breaking point of the channel. Okay, so this will give us support resistance lines, and you can see as we were going down, the market actually bounced off the support and resistance levels here. Mostly we had a resistance on the Fibonacci levels. That was this 38.2, then 23.6. The 0 is our target for the downtrend. Now let's mark the target. I'm gonna make it bold so it's pretty clear and obvious to see. And This basically is our target. Moving back to 4-hour time frame. Okay, we had a spike. You can see, guys, this spike here. And what is very interesting is that the market did not break our target, which is 0.255. We had no breakout. So now this area here does prove to be a very strong support. I believe we will have some sort of bounce right at the current levels, but if we manage to close day below 0.240 level, which is the lowest point here, then we will probably go further down. But I don't believe this will be the case. This is still a support that hasn't been broken. There was an attempt, there was a spike, but there was no breakout, still no breakout. We had no 4-hour candles closed below this low point. So the confirmation for me would probably be the close, 4-hour close below 0.430. That would confirm that the market might potentially go further down. But before that, I am strongly bullish from the current level on the Australian dollar. I think the trend will be very strong up very soon. This might be a very low point for the Australian dollar, so let's watch it. Maybe it's if you do manual trading, it's probably would be too early to enter the buy trade, and you might want to wait for some confirmation that this point will not be broken. So don't try never to catch lows of the market or bottoms of the market. It's useless. It's the same as catching the sharp knife falling down. So just don't do that ever. Just wait for some confirmation, wait for the bounce, and once the market start going in the direction that you're expecting, to enter the market at the bounce. So not at the very lows at the bottom. So as a confirmation, now I would use basically the trend line. Once we will break these trend lines, we can use several. After the breakout, wait for some bounce and then enter the market. So this could be a very nice confirmation once we get through those trend lines, get some bounce, so enter the market from those levels. But currently it looks like we should be bouncing very shortly from the current level. So I'm going to remove some of these analysis, just clear the chart, and we're gonna do even lower time frame on the Australian dollar. Then I'm gonna look at the questions. Sorry if I'm not answering them. I'm just looking at the charts now. Once I finish with Australian dollar, we can go with your questions. So feel free to ask anything you would like to know. Okay, what I like here is that we can use the downtrend channel, and we can use exactly the same method to see support resistance levels. You can see I have taken the very high point, and I have taken the another point that is as we draw a simple trend line, another highest point, and I have taken the lowest point in between those 2 points. The lowest point is this one. You can see it's not this one, but there we were lower at this point. So this is our channel. We had a breakout. So let's use the same basically method of the breakout. Okay, so we had a breakout here. So this tells us that the target might be lower. Okay, so as I expect, this is basically the psychological 1.2 level that we can get into. And to confirm this further decline, as I said, we need a 4-hour candle close below 0.230, 0.232 to be precise. We need the 4-hour candle to be lower to close lower. From the other hand, I could use the breakout on the downside slightly lower as well. It will give us a little different numbers. Not too much, but yeah, okay. If I use this point as a breakout, you should understand that there is no precise number of using any method. You should be flexible. So if I use a different breakout, this that was confirmed afterwards, you can see that I have the Fibonacci of 23.6, exactly the same as the target of different channel that we had previously. So this is 0.22055 level is still for me is at support area, unless we have a 4-hour candle close below 102.30. So just let's wait and see what's going to happen. I don't think the 4-hour candle will manage to break it, but if it breaks, we will most definitely see the lower point of this downtrend. So that's basically the Australian dollar, how it looks. Very important current candle, and also the daily chart. We should watch what levels the day will be closing at. If the daily candle will close around 0.255, then I think this will be a confirmation of the uptrend of the lowest point here, and that we are starting an uptrend. So let's wait and see how the day will close, and tomorrow we'll see and analyze it. Now let me see what questions you have. Hello, Chad. It's not a problem that you're late. It's our mistake that we basically send the email out very late. We had some problems, so don't worry about that. Okay, guys. So no questions for now. Let's go further. Maybe I'm trying spending too much time on each pair, but as this is one of our first sessions here, I'm just trying to be as thorough as possible. Try not to miss anything. Let's look now at the New Zealand dollar. As I said, Australian and New Zealand dollar are very correlated, and most of the time they do go in the same direction. Okie dokie. So now we have a simple trend line, downtrend trend line. We had a breakout of this trend line. The market actually bounced, and you can see that I'm using exactly the same method now as I used for the channel breakout. I use a trend line breakout, and I do use some sort of support resistance here of the Fibonacci. So at this point, what I see is that the New Zealand dollar can go lower. It could potentially go, but let me see now the weekly, because if we go as high, on daily chart as that, you should always check the highest time frame. This is very important because the market usually make these tricks very often, I notice. So you be careful and always check the highest time frame. Now, if we look at the weekly chart, guys, you can see that we actually did not break on the weekly, the 50% Fibonacci, which was our breakout, and the market did not break it. So that's what we need. Actually, there was no confirmation yet that we are going further up. At the same time, further down, sorry. At the same time, what I like is that we had breakout of this 38.2 Fibonacci. We did have a breakout, definitely, and it was confirmed. It was confirmed on the weekly chart. It was confirmed on the daily chart. It was confirmed on both time frames, and that's what I like to see. So currently, as it seems that we might go further down, for me, basically this weekly close above 0.8022, which is a support here. We still had no breakout, and for me it does look like we should continue an uptrend. I would be watching, of course, lower time frames to confirm whether we're going up or down. You can see that we have a buy trade and it was very high. But just so to remind you, we do swing trading, and this will happen, this sort of bounces. For example, we had let me just go quickly for the pound US dollar. For the pound US dollar, we had a sell trade around this area, and we had quite a drawdown here on this currency pair once it up, but then very fast we recovered and make a very nice profit. We fixed the profit right at this low, so it was a very nice rally for us, although we suffered this drawdown. So just so you understand, we will suffer these drawdowns from time to time. It's normal, and we are prepared for that. If you do the correct money management as suggested in our frequently asked questions, you will never have problems with that, and it will be a minor drawdown on your account. So just be prepared for that, and do not over leverage your account. It's very important that you follow the money management. If you want to go aggressive, we suggest the lot size for that. Do not go more than that, more aggressive. Okay, this is the channel as well now, the red one. Probably it will be most. Okay, so if we look at the channel here, this also is support here of the channel. So we are facing very important levels currently, which will be the key for the trend for the next 3 to 4 months. This will now establish the very long, medium to long-term trend. Current levels are very important. Just the beginning of September, so we will see some very nice trends. You can see how long the market been ranging actually here, up and down, slight uptrend, but at the same time we are back at the point where we were in June. So that's about 2 to 3 months range here basically. We're still at the same price. But slight uptrend can be witnessed here. At the same time, we can see that the trend is definitely not finished, and we should see the fifth wave after we are having now the fourth wave. You see the first wave was from the bottom to this point, then down was the second wave, then third wave up, the highest point, fourth wave going down. Now we should see the fifth wave very strong and very long. So maybe not so long, but it should be quite strong. So this point also is psychological level. It's basically very close to 0.8. If we look at the weekly chart, we're still above 0.8. So this is a psychological level as well as technical level. And so far I did not see the confirmation of the breakout on the downside. So I don't see the confirmation that the market will continue going down, and I do expect the market to continue rally. This breakout here of this Fibonacci level for me is acting as a confirmation that we will go further up, and the targets here would be quite high. Now if we look basically at the prices, the first target is 83.20, where the second target is 85.80. So we can still go another 500 to 600 pips above, up in the next couple of months, maybe even sooner than that. If we look basically at the potential time of this trend, so by the end of this month we can actually reach this point. So it's maybe not too far away, and if we do that, we will gain very nice percentage on our capital here. Okay, so let's we can of course analyze even further, this currency pair. There's going low and low time frames, but I don't just want to spend all day analyzing same currency pair. I just want to move on. But if you feel you have any questions, or you want to even more detailed analysis, you can always ask and we will do that. We guys are here to be like a trading group, so helping each other, and don't be afraid to ask anything or request anything. So we're there to help, and we will be working together on that. Okay, now the euro dollar. The euro dollar seems to be accelerating now, and I do expect that this uptrend will continue. I do not expect much of a bounce here. We already had quite a few bounces at the level where we bought euro dollar. Let's look at the lower time frame. You can see we bought the euro dollar right at this low here. We're still holding this position, and most probably the euro dollar will continue the uptrend. To be honest with you, I would expect the levels of 126.60 as a very first resistance area. So this will be the very first resistance area, and it will probably be the key level to confirm either the uptrend or the downtrend. So this is basically around this 60, slightly higher than we had the previous week, but this will be the key level, I would say, to confirm where the market will be heading. I do expect the euro dollar to be rising, and the target probably will be 1.3 to start with, maybe even higher. I do not say that the euro will be strong, but this is all again about the weak US dollar. The dollar will be suffering a lot. It should be suffering a lot. There is no actually positive news coming from the United States. There is just small statistics, positive statistics, but I think it's just dust in the eyes. There is nothing really good going on in the United States. That's the reason the gold is running north, but we can talk about the gold later. There is a huge potential for the gold, and just to give you some idea, I would expect the gold price to be at least $5,000 for 1 troy ounce. So there is a very good potential for the gold as well if you're a long-term investor. Silver, even more probably, even bigger potential. So let's dedicate some other session for that, and we'll talk truly about gold and silver. So euro dollar, let's continue there. Okay, let's look at the forward time frame. Simple channel, guys, here. Simple channel, and the first target will be around this area when we touch the channel. So that would be approximately 27. But let's look at let's do a variation, slight variation of this channel, slightly lower, so we can take most highs that we had. So basically, the trend line will go through more highs rather than just a few. At this point, our target here is the same, more or less, at 27. And yeah, we are looking basically at this as the first target. My personal target 2660 still, and the breakout of the 2660 should result in a further uptrend. But 27 will probably be as well a strong psychological resistance. So you can see this trend line, the black one. If we manage to break this trend line, I'll probably zoom out both. Okay, you can see this trend line, and we are at the edge of this trend line. If the weekly chart will be breaking this level, so we will have to close the week above the current high. If we do that, that will be probably another confirmation that we're going up. But so far, guys, I see only the signs that we should continue going up. I don't see, any major scenarios that the euro dollar should be collapsing now. I think the point of the 120 was pretty low, and now the time for the dollar to suffer. It's been basically pushed artificially up. The dollar was strong. It kind of felt strong, but in fact it isn't. The currency pair is very weak, and it should suffer. At least it will suffer against the gold. That's for sure. Against the currency, it could be just a local suffer. How far we should see. But generally, comparing to gold, the dollar should be extremely weak. Now, as we had a second trend line as well on the euro dollar, we can see that we're basically going through more or less the same point, and is 26.40 here level, more or less the same height. So once again we need to break this level on the upside to confirm the uptrend, and I think we will see this breakout this and next week. Might be some ranging or might be a very strong uptrend beginning. I do expect a rally up, but be careful, we might also see a very strong correction here, very volatile market to kick out all the buyers. You can see even our stop is just almost at the break even here. So we are protected from the very large swings here on the euro dollar. It could be expected, so be very careful. The market can be very wild right now, and without proper money management you can suffer great loss. So just be careful. We can be very wild in the coming weeks, next 2 weeks, because many major news coming, and Bernanke also should be talking. I think if I remember correctly, it would be on the 6th or 7th of September, Friday. And what he might say is that there will be third quantitative easing, which will kill the dollar for the next few months. It will be a very strong uptrend for the euro dollar, Australian dollar, pound dollar, New Zealand dollar. So the market is waiting for this news, but I think overall everyone understands that this is unavoidable and this will happen sooner or later. So the market might be starting rising before even the Bernanke announces anything related to the quantitative easing, because everyone understands this is unavoidable. This will happen sooner than rather than later. So that's another reason why we expect some volatility and weak dollar. So let's go on to the pound dollar now. The pound dollar actually was pretty strong. The pound in relation to any other currency pairs has been very strong. You can see with a continuous uptrend here, comparing like New Zealand dollar had a downtrend, Australian downtrend, but we've talked about that the reason for that is the China economy, which is also getting slow, meaning it's struggling a lot. There are problems, and they potentially will get worse. There is no one consuming Chinese good as much as before, so China basically cannot sustain the growth they had, and they will suffer, and the suffer will be substantial. So just get ready for the problems in China, and they will be announced as well. Maybe not as soon, but it's not too far away. So now for the pound, this is simple channel as well, the red channel as well as simple trend line. Now we did not actually touch the top of the channel, and I do expect that we should get there. And the first target for the pound US dollar for me would be 1.6, and the breakout, I think we will actually we might break this area and go further up. So let's just see the potential here. In case we break out, what levels we're looking at. In case this breakout will happen, it will probably be higher. This is just a projection. Hasn't happened yet, but this is just if it will happen. We can see already some support resistance level here. So the target will be 59.60 probably, and then the breakout should be at this point. If it will happen, then we will see the target of 161, then 162.50, and final 165.20. So I believe we have potential to get to one of these resistance areas, and I do think that we will have a breakout of the channel. I do think so. So let's leave that just this projection for the next session. We will be following that. Maybe this is just also some sort of idea that you could use for the future. We have not basically had any breakout, but it can be used basically to see what future can hold for us. Could be useful sometimes, could be not. Some people may find it extremely actually useful, in fact, and I had such cases previously. So currently we do need to break basically the high of the 159. We need to close the daily close above 159.15 in order to confirm the further uptrend, and I think we will see that very, very soon. These or next weeks we should break, and the market should be accelerating. We should see quite a rally on the pound US dollar. So that's what I expect. From the other hand, to confirm the downtrend, I don't know what should happen to confirm the downtrend, but so far, guys, you can see even this resistance area, you can see that the market has been bouncing several times off. The market did break this the bold black line, so now we had a bounce back to the same resistance, and now it becomes a support. And in order to see some sort of downtrend, we will definitely need to close the day below 157.50. That would be some sort of downtrend. We can start considering further decline if that will happen, but before that, the market looks extremely bullish to me, and I would be going only for the long trades, choosing lower points to enter the market on the buy side only. I would not be going short on the pound US dollar. So if you do manual trading, do manual analysis, just maybe it's a good idea to see now and choose the bounces. If we have any bounces, just enter the market long, not short positions. So now we're left with two currency pairs. Let me see. Pound Canadian dollar and United States dollar Canadian dollar. So pound Canadian dollar, we had a buy trade. You can see it was quite a long time ago, about month ago. And what happened, we had a very quite a drawdown. Actually, it was a minor drawdown, very regular drawdown, guys. We will have 200 pips is a normal drawdown that we have. Our targets can be anywhere from 500 pips to 1,500 pips. That how long we can hold the positions. So just be prepared for that. And the drawdown of 200 pips is something that happens very often. Don't be surprised. Now we had the drawdown, and you can see I use the very same levels, tactics of the Fibonacci levels here. This is the trend line. This is the breakout of the trend line, which is 50% Fibonacci. This is our 100, and so is the target. Okay. So now, as we had this bounce of the 38.2 Fibonacci, now in order to confirm the downtrend, we would need to be below that. But currently, I would expect some ranging market around this area, and actually, our model suggests that the pound Canadian dollar should be continuing the downtrend. Although we have a buy trade now, the signal for the sell of the pound Canadian dollar is getting stronger every day. It's still not confirmed, but the signal is getting stronger. So we need a little more time to confirm the sell trade here, which might be triggered this or next week. So let's wait and see. Hopefully this trade will come back in profit. We will fix the profit and then enter the short trade. This might be the case. although we might also close the trade with a loss, which is nothing really major. It's 50, 60p currently, so this is nothing, very little small loss, so we can handle this loss, and it's not a big deal. So let's use a simple trend line here. First of all, I would expect another bounce of the trend line, so there is a potential of the further uptrend, that's for sure. This is a nice opportunity for the buying pound Canadian dollar, maybe not for long, maybe another 50 pips so on the upside, but still the opportunity is there, I think. We should at least bounce back once again of 57.50, which is currently a very strong resistance area. At this point, if we're not gonna break this level, the market might start going further down. So we might continue downtrend on the pound Canadian dollar. But currently, let's wait and see what happens. Now, we might continue this range between these two Fibonacci levels, which is between 56 level and 57.50. 150 pip range is likely. I don't expect anything to happen right now with this currency pair. We might continue ranging here. So overall, we are in a long position here. We expect an uptrend, but generally in the longer term, we do expect the downtrend. So we should be getting into the sell trade shortly. Don't forget that you can ask any questions, guys. We're getting to the last currency pair that we have, which is pound Canadian dollar. Okay, that's the pound Canadian. And you know, I do expect that this currency pair will be going down, and probably big time. I think we will continue this long-term downtrend, and we will probably make even lows lower than we had. The lows here was 109.50. I believe we're gonna break this low, guys, and go further down. The dollar doesn't look good, but of course this is a bit premature to say, but I don't see any future for the dollar comparing to Canadian dollar currently. So the first target here would be just a simple trend line that we have, which is 55, 56 area. So that's 270 pips probably, at least, that we should be going for the Canadian dollar. So and to confirm the long-term downtrend continuation, we would need to break the trend line, and then we would need to break basically this bottom at 95. So first, let's see how far we can get. There are fewer targets on its way. One is a simple channel that will be a support, then the next support, then the trend line, the bounce of the trend line. So there are few support levels for the Canadian dollar. So we might continue basically the downtrend as we're going now, you know, a bit choppy, but consistent downtrend. Currently, we might see some uptrend, short-term uptrend for the United States Canadian dollar, but this is mostly because the Canadian dollar itself will be correcting, not the United States dollar will be stronger. The correction is likely here, and I would expect some ranging market still, maybe this week. Then there will be some clarity in the market whether we're going to break on the downside or continue ranging. I do not expect very strong moves on the upside, and I think we will continue this downtrend with the Canadian dollar long term. Now let's see the channels, what we can get from there. Take the top, go down to the breakout. Okay, so now we have a few levels to watch for. Look at the daily. Okay, we had a breakout basically of the 23.6 Fibonacci, one before the zero. So maybe we should be looking at the levels such as 99.80, which does look here as a resistance level. It does look that way. So maybe this is one of the levels to watch for, and if we're not going to manage to go as much as that, there is another support much, or sorry, resistance much closer actually, which is 98.90. Very close as currently, and let's basically watch for it. Now I'm gonna try a variation of this channel as well, slight variation, and maybe we can get some different levels. Definitely there will be a little different levels. Okay, you can see now how different it is now, and we actually had a Fibonacci level 23.6, and it was right here, and it's acting now as a support. At the same time, 38.2 acting now as a resistance level. And to confirm either an uptrend or a downtrend, I would like to see breakouts from either of these levels here. So let's mark these two levels and watch for the market to do something, rather break on the upside or a downside. This is basically the range that we might expect to go on the United States Canadian dollar currency pair. So this should be the range unless we break either on the downside or an upside. The target here is 96.80. 96.80 after and if we break the current support level. Will be interesting to watch. I definitely expect the breakout on the downside, but no one knows what will happen before that. We might have a spiky market, kick out some stop losses. So as I said, be very careful now to trade. Make sure you use proper money management. If you do any manual trading, make sure you don't over leverage your account. Okay, so that's basically looks, guys, like that. And overall, Australian dollar, New Zealand dollar, Euro dollar, Pound US dollar, I do expect an uptrend for these four currency pairs. And Pound Canadian dollar and United States Canadian dollar, I do expect a ranging market for these two pairs. Slight uptrend is possible due to the weakness of the Canadian dollar, but overall probably a range trading, and you can maybe try catching some opportunities up and down. You know, ranging market is very good catching the lows and tops to buy, sell quickly, and exit the market quickly as well. So these are also some opportunities here, and which you might want to try catching at least on demo account. Okay, so that's probably gonna be it for today. Let me know if you have any questions. Just put them in the chat box and we will go through them. What is your general impression about swing trade effects? Have you had any trades? Have you had any profitable trades yet? Do you think we can improve something? Just let me know. Any suggestions are appreciated. Any feedbacks, please let us know, and we will basically think over and try to improve whatever suggestions you have. Okay, Chad, thank you. The analysis are pretty in depth, but I would say they're still not in the depth as we should do them actually. To do an in-depth analysis, we should analyze each time frame for a single currency pair. We should take, starting from 5 minutes chart to 1 month chart, we should analyze each and every time frame, and then make make our impression of the market direction, then choose the time frame we want to trade, where we have most support resistance levels. So this is still not an in-depth analysis, but it's just something we can look at. Okay, so Chad, did you had any trades so far? Any profitable trades? Colin, what about you? Because the recent trade we had, I think we had some profitable trades recently. You see that the last three trades we had a euro dollar closed with the loss, then euro dollar closed with the profit, then United Canadian dollar loss, then small profit, then we had euro dollar nice profit, then Canadian dollar 324 profit. So that's basically the recent trades, and you should have at least these two trades of the euro dollar, which is 175 pips profit, another 30 pips loss. So you should have these two trades, and you should have the euro dollar buy trade, which is currently 86 pips profit. Okay, Colin, it's not a problem. As we go through each and every session, you will start to understand how it works. Just maybe next session we will try to get to know the Fibonacci levels. Just take one currency pair, and apply to many charts, many time frames. Just practice with this Fibonacci so you understand how it works. You can apply it to your own analysis. It's not that hard, but there are many tricks actually. It may seem simple at the beginning, but there are many tricks as to how to choose the highs and lows. But as we go, guys, I will show you how you can do it in an easier way, and you will get used to it. That will definitely help to make some decisions if you do some trading, and I hope our signals will also help you to make some decisions, and of course will make us some profit as well. Okay, so okay, Vasilis, no, I do not trade intraday, just swing trade. I think the swing trade is something much more that suits me. You don't have to monitor the market all day. You don't have to catch all the small moves, control the stop loss. I prefer the longer time frame because you can just relax and make the profit. And the profit actually is not lower than intraday trading. It's actually more, if not the same, it's more than you can make in intraday trading. So with moderate to conservative settings, our target is 7% monthly, and with this 7% monthly over the past 12 years, of which 10 years were the back test, 2 years was demo, we had a maximum drawdown of 10% on the balance. That of course means that we can have a 20% on the equity drawdown, but still with 7% monthly profit and potential 20% drawdown is extremely good performance. You must agree. You're basically going to make about 85% yearly. That's with a conservative risk in 20%. You're making 85% a year. So you are nearly doubling your investment on a yearly basis. So I think it's a good performance, considering that it's moderate to aggressive. You can go more aggressive and make over 200% in profit monthly, or sorry, yearly. So that some people like doing that. I personally prefer not going more than moderate. I don't like aggressive trading style because it does involve a lot of psychological tension, I would say. So if you are not ready for the large swings on your account, do not go aggressive. I mean, if some people trade smaller accounts like $1,000 and you can afford to lose most of it, then yeah, it's probably a good idea. because people with smaller amounts tend to go more aggressive. They tend to risk more because it's not such a large amount that they should be, afraid to lose. But the usually institutional clients and clients with $100,000 and more, they do not like risk. They go with as low risk as possible. But our portfolio is designed so basically you can trade with like $10,000 should be suitable for you. And with $10,000, 7% monthly and 20% risk is very suitable. So 1,000 at least. You can set to moderate settings and get your $1,000 monthly from $10,000, or you can go more aggressive and double that. That will result. You should be prepared though to about 50% drawdown in the worst case scenario, but at the same time you can make 20% monthly. So this is something you could expect. This depends only on how aggressive you want to be. Just also, you should understand that the profits you make can be reinvested. You can basically withdraw half of the profit you make, but leave the rest of the profits to work for you. So reinvest, compound your interest. That will definitely increase the profit potential for you. There are some tricks you can do, so that's how it could work as well. Okay, guys. So no questions for now, I guess. If not, so we're gonna close the session for today, and we will basically have the session same time tomorrow, 9:30 EST time. So be prepared, and if you're not there, you can watch the recording session on the website. This video will be posted on the website, will be uploaded tonight, so you can watch it tonight or tomorrow morning if you missed something. Okay, guys, so that's it for today. I thank you for coming, for attending, thank you for being the member of Swing Trade FX Signals. Hope you enjoy being a member, and I'm looking forward to nice profits for all of us. Thanks again, and we'll talk tomorrow, guys.